Hey guys, welcome to The Market is Open. Check out our website, themarketisopen.com. So Gene Munster and his company Loup Ventures have recently released their tech predictions for 2020. And in this video, I'd like to go over a whole bunch of things that he's had to say about Tesla. But first, please subscribe to our YouTube channel. We would really appreciate your support in helping us grow our channel. And you could also support us further on Patreon at patreon.com/themarketisopen. I always like to hear what Gene Munster has to say because he's had a great track record in the tech sector, specifically with Apple. He's an analyst turned VC. He used to be a senior research analyst at Piper Jaffray, and now he's the co-founder and managing partner of Loup Ventures, which is his VC firm that invests in tech companies. So I like that he gets a good read on tech from both the tech startup side, but also his many years of experience researching larger tech companies like Apple make him have a great insight into what big companies are up to as well. And I also think that his views of Apple in the past were very forward-looking, and they've been correct. So despite there being some bumps along the way, he's always stuck with Apple and given reasons as to what the future might look like. So today I'm interested in what he has to say about Tesla, a company that he's been following and researching. So let's start with Gene Munster's predictions from last year for Tesla. In 2019, Loup Ventures predicted that despite increased competition, Tesla will still maintain its 50% plus market share in the United States. And this ended up being the case. And remember that many other analysts were bearish throughout 2019. We've highlighted a few of them on our channel in other videos. And also Tesla stock dropped below $180 a share, and people thought the company wouldn't make it and there would be huge competition. So I mean, now we have 2020 hindsight, but at the beginning of the year, it wasn't a sure thing that Tesla would succeed in 2019, especially after the slow first quarter. Now his 2019 prediction has been correct. Through until about September 2019, Tesla has sold 75% of all battery electric vehicles in the United States, according to Inside EVs. So Loup Ventures' statement in 2018 was correct so far. And not only that, but Tesla has far exceeded 50% market share. They have 75%. And we have yet to see any real competition for Tesla in the EV space. Loup Ventures has also made a prediction for 2020 for Tesla. They expect Tesla to exit the year with above 60% US EV market share compared to the 75% from today. They also say that GM has 17% market share with its lead in the US auto market today. For comparison, of course, 17% of the overall 97% ICE car market is much more than the 60% of the 3% EV market that they're predicting for Tesla to have by the end of the year. But if EVs are growing, analysts do expect to see Tesla's market share come down from this 75% level, but the EV market itself will grow dramatically. Actually, I think it's pretty amazing where Tesla is today, given their size and the impact that they've had, despite only having about 0.5% market share of the total global auto market. Furthermore, their main prediction for 2020 is that Tesla will exceed Street Deliveries' estimate of 463,000 vehicles. That's Wall Street estimates. Now, I think 463,000 vehicles is a little bit low, and in our last video, we said that Tesla could deliver about 575,000 vehicles in 2020. Actually, Tesla is currently capable of delivering about 100,000 vehicles per quarter. So that's already 400,000 vehicles per year if nothing really changes. However, as Gene Munster points out, the China Gigafactory is just starting to deliver vehicles, and I think that alone will drastically increase Tesla's sales. Also, the Model Y is expected to roll out next year, for which Elon Musk has said that the demand for that vehicle should eclipse the Model S, 3, and X combined, because the SUV/crossovers are more popular than sedans. I also think that the Model Y will be a lot more profitable, especially because the costs are going to be approximately the same as the Model 3, yet the price is going to be a couple $1,000s higher. Now, Gene Munster also notes that Tesla will grow 28% in 2020, whereas the overall auto industry will be flat. I assume he means that the overall auto industry includes Tesla, which it does. So if it stays flat and Tesla grows, they're just eating away at the combustion engine from the other automaker. So every Tesla sold means that one ICE car isn't. And if that's the case, then the car makers in 2020 better be bracing for the fall. Especially, he says, 28% growth. I'm not exactly sure his reference point for that. I think it's 2019 numbers. But that would mean he's talking about the Wall Street estimate of 463K. Again, in our previous video, we estimated about 60% growth, not 28%, in deliveries, assuming they deliver about 360,000 vehicles in 2019. Loup Ventures says that Tesla's increase in quarter-over-quarter sales next year will give credibility that the electric car theme is here to stay. I think we already saw that in 2019. It seems that Tesla's demand for Model 3 continues to be higher than their production, so more and more people are considering electric vehicles. And secondly, every major car company is now starting to come out with electric vehicles, such as Ford and Porsche and Audi, despite these vehicles having just awful specs when compared to Tesla. But nonetheless, it does get people thinking about going electric and building confidence among consumers. That said, 97% of cars sold today are internal combustion, but that's great for Tesla, as Loup Ventures says, because it opens up a vast addressable market for Tesla to compete in. They also say that Tesla is a pure play investment for both electric and autonomous. So I like how they throw in autonomous into the mix. Tesla is pushing hard to be the leader in both of those things, but the car market alone is enough to add a huge amount of value to Tesla's stock. Autonomous is a completely new market that hasn't been done before, and if they can become a leader in that, I don't think that any analyst on Wall Street has even considered autonomous, but the more I see these features that Tesla is putting out, like Smart Summon and their sneak preview of the FSD, the full self-driving, which shows stop sign detection, for example, the more I see that, the more I believe that they will actually have it sooner rather than later. And they do still have a full year to hit their own 2020 deadline that they set for themselves of releasing full self-driving. But one thing I do know for sure is that most other companies are using LiDAR. They have no real data or miles driven collected and have no machine learning expertise. I think Google's Waymo may be in the distant second place, but they're stuck using LiDAR as well. Of course, Google is good at machine learning, but it's almost like they're shooting for something that's more like automated driving instead of autonomous driving. Like vehicles only driving themselves in predetermined areas on predetermined routes. To me, that's automated like a subway system, but if anything in the environment changes, the vehicles don't know how to behave. And I think that's different from autonomous driving, which is more like what Tesla's working on. Vehicles that can handle a much wider variety of situations because they've been trained to do so. The next thing is that Gene Munster spoke to Bloomberg about his Tesla predictions. Bloomberg starts by saying that in 2020, Tesla is completely reliant on this new China factory, which Gene Munster quickly disagrees with, citing that China is important for Tesla because it will lower the cost of vehicles due to the tariffs and transportation by about 15 to 20%, which is huge, but he says that Tesla is much more than this. And I think it's a little naive for Bloomberg to think that Tesla is all about China. If you've been following Tesla at all, the master plan is really to bring electric vehicles to the world, not just China. And this is just one of the many steps that Tesla is taking to do that. Of course, the factory will be immensely profitable for Tesla, but they've already announced the Gigafactory 4 in Germany, and Elon has even said that the world is likely going to need about 100 gigafactories, so this story isn't just about China. Furthermore, I also like that Gene Munster doesn't set a specific price target for Tesla, which is comparable to other analysts on Wall Street who have been completely wrong on their price targets. Most of them have been bearish, and they do have to keep updating their price targets to follow Tesla stock. That sort of defeats the purpose of a price target, which is supposed to be a predictor of where the stock is going, not just following the stock wherever it goes. On the other hand, Gene Munster is more concerned about the direction of the stock. He says, "We think it's worth much more than the 77 current billion-dollar market cap that Tesla has today." And he cites that there's an undeniable truth to electric vehicles and autonomy. So I find those words to be quite interesting because it very much resembles Peter Thiel's question that he poses in interviews and to startups for great business ideas, which is, what do you believe is an important truth that no one agrees with you on? And I think that goes back to the fundamental idea for Tesla that Elon Musk believes EVs are better in every way than ICE vehicles, and very few people agreed with him on that. Even he himself thought the company would fail. But now we're seeing that he's going to be right on that, and Gene Munster appears to be shedding light on this, that right now EVs and autonomous appear to be an undeniable truth, meaning they're sort of inevitable and they're going to happen. And Tesla has been one of the few companies working on this when everyone else has been laughing at them. So they have a huge head start for an incredible business, and it's only in the early innings. And Munster also says that although the stock price has run up and it's a $430 per share company right now, he doesn't believe that the stock has reached escape velocity yet, which is really interesting to me after this big run up. But Tesla still has big ambition far beyond China, and the company may reach this escape velocity that he's talking about. Or rather, maybe it's more of a tipping point, I think, when you get that real flood of buyers from the mass market who realize that Tesla has a great product and they all decide to buy an electric vehicle. I think Gene Munster alludes to that 90 million vehicles sold every year that Tesla wants to capitalize on. And right now they're just selling about 0.5 or 0.4% of that total overall market. So there's plenty of runway ahead for Tesla. All right, guys, thank you so much for watching. Please smash the like button if you enjoyed this video, and let us know what you thought in the comment section below. Do you think Tesla still has much more room to run, or are they going to fall back down for a bit before making any steps forward? Also, if you'd like to support us some more, please head over to patreon.com/themarketisopen. We would really appreciate your support. Also, don't forget to subscribe to our YouTube channel, and thanks so much for watching.